Hey everybody, welcome. Nice to be on with you. Hi Rosa, good to see you on. Hello Bob, Mary, welcome. Hi Matt. Hello Arthur, welcome. It is nice that you're all joined me. I appreciate it. Hi Adam. I do have something short prepared for you tonight, and we'll dive through that, and of course then get stuck straight into trading for the week from tomorrow. So what have I got for you tonight? I prepared this last week actually. We all need a second income, and technically trading, well, this is yours, isn't it? And if you look at the chart there, you can see we've had a trend, and I hate to say the words together, but look, we're in trend and the signal, and there was lots of pips available. Whether you're trading the Dow, the Nas, the DAX, it doesn't really matter, the SP500. The rules remain the same with my strategy, as Rosa rightly pointed out some time ago. Anything with a candle, and there we are. So we all need a second income. Well, why? Well, because recently, according to news I read anyway, at some random 6 a.m. in the morning, a random Tuesday, hopefully not a wet Tuesday, but it doesn't really matter, tens of thousands, apparently, of Oracle employees woke up to an email in their inbox, and it stated, "After careful consideration of Oracle's current business needs, we have made the decision to eliminate your role as part of a broader organizational change. As a result, today is your last working day." Now, I don't know how true that is. It was news I read. It could have been an April Fool's thing, but I doubt it, because we've read so many, or we've seen so many of these big companies letting lots of people go in the not too recent, or not too distant past, I should say. There's a guy, Larry Ellison, I imagine he's the owner or CEO, and he's worth around $185 billion. And after the latest announcement, the company's stock moved up. Well, there you go. For a long time now, we've been told a simple story, haven't we? Billionaires are job creators. There you go, Mary says, employment rules don't seem to apply. I'm guessing not generally, Mary. I've never trusted them anyway. So billionaires are job creators. They fuel opportunity, deserve incentives, and should be respected for providing employment. Well, that would be your little secret, would be my reply to that. But that narrative leaves out something important. Companies don't create jobs out of generosity. They hire when it serves them, when it serves growth, and when it serves margins. But when priorities shift, and remember the whole AI shift lately, which I don't trust that neither. When priorities shift, so does the workforce. Large-scale layoffs. They're not always a sign of failure. Often they're simple strategic or mathematical decisions. Reduce costs, improve profitability, reallocate capital, in this case towards AI. There you go. It shows you I wrote this last week. Yes, severance gets paid and transitions are managed, but the underlying reality doesn't change. Employment is only a transaction. You bring skills, time and effort. The company compensates you as long as it aligns with the company's objectives. And I worked for a company that was just like that. In fact, I bought the company and tried to change it, but I didn't really enjoy the whole transition and the change myself, so I sold out. But there you go. You bring skills, I've said that bit, you bring skills, time and effort, the company compensates you. Next time you hear, you should be grateful for the job, it's worth remembering it's not a gift. It's an exchange, and like any exchange, it lasts only as long as it benefits both sides. As a trader, you're an active investor in yourself. Now, we talked last week about beliefs. We can trade intraday and invest when the opportunity presents. We seek sensible crypto levels to buy and hold, don't we? You've heard me talking about them in several sessions. We've sought sensible levels on various indices and traded them. And we've bought the dips too. And we'll be talking more about that in a moment as well. So we can do the same with individual equities, currencies, FX pairs if you like, or indeed with these indices. Now I've got the SP500 on screen and I note there's a fib, so of course I have to draw it. Look, we got a run of greens, tweezer bottoms, one of my classic pivots there, you know, where we go down below an EMA, up above the close, divergence, rejection of a line. I'm not overly familiar with the, what do you called, SP500, but we'll switch it in a moment to the Dow. And then look how the fib level, the go long, the continuation at 38.2, after the pullback and the rejection of the 50, go long at 38.2 agrees with a signal. It agrees with lower lows, higher lows, divergence within the indicator, divergence, rejection of a line, the R4. This is R4, so we reject R4 and it's the 61.8 of that little fib at the back there. What would it have given? Well, I don't know. I haven't counted the pips on this kind of thing, but if we go from somewhere to mid-level there, we're looking at, okay, it says 4 pips in this case. It's probably not 4 pips. It certainly wouldn't be 4 pips on the Dow, would it? Let's have a look at what the Dow says it is, and there's someone available who does trade the NAS to tell me what that would have been. There is no fib with the Dow. It's just straight up signal from the top of the hour. And we can look there, we'd have been in, wait for the pivot, the what do you call the PSAR pivot if you like, a 971 to the 48,000, pretty much 30 pips with a full-on hopper combo. And again, the same divergence, yet it's still there. We've still got lower lows, we've still got higher lows, rejection of a line and a signal. There you go, Matt says it's 40, SP500, that was 40 pips. Thanks for that, Matt. Now, something else I wanted to talk about today is that recently, and in fact occasionally, we observe serious pullbacks and dips in the markets that we trade. They do not go unnoticed, and we do factor all analysis into our daily trading plan. I'm going to quickly flick onto the 4-hour chart here. There's a gap, pullback. Note it's a pivot off one of our significant levels, or if you like, one of our significant levels. There's a gap, a pullback. Note it's a pivot off one of our significant levels, or if you like, several of our significant levels. Yes, it's a pullback. Yes, it's a gap. Note it finds support at one of our significant levels. One of our significant levels. One of our, well, that's a gap up, and one of our significant levels, and one of our significant levels. And if it seems like I'm repeating myself here, it's because that everything we do is repetitive, it's repeated, it's divergence, rejection of a line and a signal, and it's over and over again. And yes, the signals might differ depending upon the strategy that we're looking at on the day. And of course, I'm not going to show any of the major fancy, easy peasy, follow the yellow brick road kind of strategies on a public YouTube. But you all have known me for a very long time by now. We haven't taken any new members on in I don't know how long. So you've all known me for a long enough time to know that all of the things I'm saying here make sense and they all fit our usual rules. We've just looked at 1, 2, 3, 4, 5 markets as a minimum. Yes, that's the dollar index. I have it on just to keep Claude calm, quiet and safe when he's on or sane. Otherwise, it's not something I trade, follow, have any interest in really whatsoever. The divergence, rejection of a line, rejection of a lines, rejection of a line, rejection of lines. You know what I'm saying here. Anyway, the fun fact, if you like, is that we do take note of those pullbacks. Consider, please, then, that a normal pullback is about, well, let's say plus minus 5%. A normal correction is around 10%. whilst a big correction is considered at 15%. And I'm not just sucking these numbers out of my thumb. I looked it up, I searched, and I found that, you know, the let's say I'm using inverted commas here, the clever people in the market, the smart money, all right, they consider those levels to be correct. A big correction is considered 15%. We head into bear territory after 20% and the potential collapse at only 30%. However, if we're looking at, like, remember we got to 50,000 here, remember we got to 10,946 was that big level. In fact, I'm going to switch that to monthly for a moment. Monthly, we got up to 10,948 something, and 10,946 was the level I'd predicted. And look, there's a pullback along the way. If we said 8 and we took 7, 6, 7, 4, and the difference, and as a percentage, you know, that's not, we barely headed into bear territory there, like, did we? But it was a significant pullback, absolutely. And we've had a significant pullback. Note, it's early in the year. Note, it was early in the year. We don't care. We got what we were looking for because we look at tight time frame charts, and we're in, smash the window, grab the loot, and we're out again. Anyway, after the 30%, we head into a 40% market crash and down to a 50% financial crisis. And until those percentages arise, we can continue buying the dips, selling the pullbacks carefully, of course, and continue with our regular, everyday, high probability, low risk way of securing our pips, our profit, our, let's say, trading sense and sensibility and sanity, if you like. Tom says, makes sense. Yes, I'm still working to hold that much sense at one time. You and me both, Tom. I don't suppose I'm clever by any means. Henry says, hello, sorry for the late entry. Don't worry, you're here now. And look, there's a 4-hour PSAR about to flip. There's a 4-hour PSAR flip. There's a 4-hour PSAR flipped. We all know what those things mean to us on an intraday trading basis, because regardless that we trade a 1 minute side by side with a 2, and regardless that we consider those to be plenty, and they are, there is a fib there now. If we do that fib, there's a pull. I've got to draw it now. I've just got to, just for my own sensible peace of mind. Bottom of the first green, top of the first red, pull back to the 38.2, inside bar and a breach, and boom, you'd have a continuation right there, wouldn't you? And it just happens to be one of my pretty MACD scalper patterns as well. And it's a lot of things, isn't it? It's another break, a green kind of thing. It meets all the rules of a continuation anyway, and we'd be able to, what did we say? The initial signal from the PSAR, if we went from there, we'd be able to run that up, pull back somewhere around here, only 20-25 pips or so, worst case scenario 20, and then a re-entry here above these two sort of inside bar looking things. There's a red bar that's a pullback. There's potential for 13 pips or so, but there's your first target at 24. So there was potential to take 40 pips or so just in this session so far, and we only been on 13 minutes. Now, how many are we? Oh, okay, we're only 23 people in this session, but please speak up, unmute yourself if I've just said anything along the lines of, this is not a buy we would have, this is exactly a buy we would have taken, that is exactly a fib continuation we would have taken, and we'd be looking for all the usual suspects along the way. Yes, a big round number battle, but once we're through it, we're looking for 48,040, and we're not letting it cross back below a line. All of our standard, everyday, repetitive, repeatable learning is not only implied, but right here, visible on screen for all of you to see, all of you to take advantage of. And I wonder, did anybody take advantage of it? Henry says late entry. I wonder, did that mean you entered the trade late, or did you enter the session late? I don't know. I don't mind either. Both are a permissible session. Fair enough. Okay. So nobody's in this. Is Anne on? No, Anne. Okay. So there's possibly nobody in this trade at the moment. I have no problem with that. It don't worry me at all, because we're on in the morning together, and then we're on in the afternoon together, and then we're on in the evening together tomorrow. And those 3 sessions have been generating far more than enough pips and profit for us in the past. I don't know how long now. Well, it depends how long you've been on with me, but that's what we're generating: profit and pips. And there's no grey area, doubts, issues. There is no hype, and I do want to say it. We don't do the overly, oh, let's all get rich by tomorrow kind of nonsense. That's not who we are as a group. And the reason I'm throwing that at you is because a colleague, a friend, a guy who's in our group suggested that he do, now that he's more familiar with what we're doing, I could market this for you, James. And he's put a proposal together, and all the right words are written in that proposal. That we haven't agreed to go ahead or anything at the minute. I'm enjoying the downtime of not running courses and stuff, but it is there, and it's there to be done. And we are the right place, and we're in the right place to be able to do those wonderful things. I'm interested to see if it's going to do the 48040. Now that we've gotten through that line, remember, support tests resistance, resistance tests support. We're over the central pivot anyway, which is nice. It doesn't really matter because I'm not in the trade, but I did trade earlier. I was chatting with Matt, and he is on. He will confirm for you. We were both in a meeting, and I said, I'm trading the Dow. I was waiting for the meeting. I took this trade. There was some fibby, pullbacky, stuffies. In fact, you know what I'll do? I'm going to open my personal journal. I don't normally trade on a Monday, but it was right there, and I was sitting listening to the meeting. I was only listening. It is what it is. Oh no, actually I missed that one. 17.29 first entry. There you go. Obviously you guys know I'm using me T2B2, but look, green, red. There's a fib in there. We've pinged off something and we've carried on. So 17.29, and it gave me 60 pips. And then at 17.44 over here, a pivot. Divergence, well, yeah, absolutely. Divergence, rejection of a line, sir, if you don't mind, and signal. And I took 70 pips off of that one. I believe it went in just above the white, above the high of that bar, actually. But in anyway, finger on the button as we approached the big round number. It just ploughed right through it and tally-hoed on. 2 trades, 130 pips. Very nice, and I don't mind if I do, sir. And there you go. That's the beauty of what we do here. I could have taken another one here, but instead I'm focused. I'm focused on working with the group, educating our group, and working to the high 35, so it still needed to go another 5 pips to hit the 40, and there's a bit of divergence in there now, so it might be a bridge too far. But what does that mean for us as traders? Well, that's our target. We are overbought. Our target isn't going to move up much from that, but we're not going to let a lower low take many pips from us. We'd be in from this one minimum down here, so you'd be in, and you're looking for 48 or 040. If it gets there, I'd be the first to say they will do me. Those pips right there, them's mine, and the rest that are on the table can stay there. Don't mind, I got mine. And if we look at it, it'd be 40 down to the 48,000 and probably 50 pips overall. So as at now, we'd be nursing a 40 at 48,030 and a 35 at 48,025, which is probably where my tolerance would be, I think. But that's just me. You all know me, and you're welcome to unmute and challenge that. Hi, Petra. And Petra says, interesting topic tonight, James. We'll have to watch the recording. Okay, no problem. I will be uploading it to YouTube in a few moments. Hopefully I've covered a few, largely I think, mindset issues for some, because a lot of people just have this nagging doubt that says, I can't do it, it's too hard. And it's just the same thing over and over and over again. So it's not too hard, it's not complicated, and really the only obstacle is you. I once read a book, and I hated myself for reading the book, but I knew the guy. I was introduced to the guy who Blaze Brosnan. You are the limiting factor, and it was all regurgitated stuff that I've read in The Magic of Thinking Big, The Magic of Self-Direction. You know, all those books you read when you're young and someone puts it in your hand and says, you want to go into business? Read that book then. And that's, yeah, I did all those things when I was young. And now, yeah, I've worn the t-shirt and sold it again and bought the business and bought another one and sold that one and bought another one. And I've had several of them through the years. Trading has been the most lucrative of all of those businesses. And I'm very happy to stay, to state that and to conclude there and say, I don't care what other business you've got, it'll never beat trading, because the return on investment can be ridiculous. It's not get rich quick, but it's get rich clever. That's what it is. It's get rich very, very clever, because you do it properly and you don't skip bits, and you invest in yourself with some learning and some knowledge and some practice. And we didn't quite hit the 025, did we? But we have dipped enough to just push it up to the 48040. And if we do in this session, and bear in mind we didn't hit the 48025, that would have been my worst tolerance. Flipping the PSAR now would do it for me. So yeah, don't matter. Where are we? We're 20 minutes in. I think it would be safe enough to end the recording here so that I can get it uploaded for everybody. And as always, I'll end the recording by saying, please trade safe, everybody. And I look forward to seeing you on the next live session, assuming you're going to join me.